Hello and welcome back to Green Pips FX. And on this video, guys, I'm basically gonna be teaching you guys this deadly swing trading strategy. Now, first and foremost, we need to know where we are in terms of structure, right? We need to analyze and see in this point, at this point in time, where are we in terms of structure? Are we either in a bullish trend or in a bearish trend? So lo and behold, we can just zoom out and kind of see the bigger picture from where price just came from, and we can see that price is in a pretty much very good bearish trend, right? As you can see, we have a series of lower highs and lower lows being created over time, right? Up until this area here, where we are just we're just existing in this range, right? From this high, right, a lower high that has now created a lower low, which has been put into place after this current break of structure here. Sorry for that. Let me just decrease these drawings here, and then we can see price in a very clear manner. So this is where we are in terms of price, right? So we currently have this break of structure right here. So let's just call that a BOS, right? And from this break, so I don't know, let's just make this big, put that at 20. Yeah, so we have this BOS which came from this high that took out this previous lower low to form a new lower low, right, with this acting as its lower high. But when we come into in-depth structural analysis, right, we can see that from this high here, price attempted to go bearish and then failed to break the low with this move here, and then price came up and then came down once again. So at this point, we're pretty much existing within this range here, right? Within this range from this high to this low here, right? This is the range that we're currently on. So from this range, we need to, try to find a good area. Of course, since it's a bearish trend, then it's gonna be an area of supply. So we need to find a good area of supply, which is that last up move before the down move started, where we're pretty much gonna wait out for price to just come back into this area, mitigate this area, and once this mitigation is done, we can now confirm and go bearish from there, right? So since it's a swing trading strategy, it's particularly very suitable for people who are not usually on the charts always. So from there, let's try now to see where's that last buy to sell, right? So we can see price coming down, and then price leaving this pivot wicks in here. So let's just zoom in and make this wide there, right, since this is just for educational purposes. So price comes down and then starts pushing a little bullish, right, leaving these pivot wicks, right? As you can see, price attempted to come down and then failed, closed higher. Same applies to this candle here, right? This candle here, price came higher again, price closed high. So we can see around this area here, this is where our bullish pressure exists, right? So particularly for me, this is the last buy to sell. Now, again, this is not financial advice of any sort, right? This is just based on my perspective, my understanding throughout my years of trading. So from there, we could just now sit back, probably just set an alert in here, right? You can just set an alert in there. I don't know if this will work. There, right? We can just set an alert there, and then wait out for price to come reach this area, trigger our alert, and then we can now come back to the charts and see what's happening in this area here, right? So let's now play price out. Let's just reduce that speed a little bit. Okay, so price goes up, price goes up, price goes up, price goes up, boom. There we have it. Our entry, our alert had been triggered, of course. So let's just go back and oops. Okay, so I went for the wrong button, but of course everything is now set perfectly well. So from here, this is all based on the daily time frame. The next thing we're gonna do is switch back to the 15-minute chart, and of course there's two kind of ways of trading this. First is through these what I call risk entries, right? You could just place your entry there, your stop loss above the zone, of course, to make it a 130 pips target, whatever. And the take profit target will always be this low here, right? This right here is what we call our next liquidity run. So this is one kind of way on how to trade this, right? And the next kind of way is refining this, right? Since this is for those who don't want to have such huge stop losses, right? So you can refine this and minimize your stop loss with the same target, which ultimately leads to an increase in your RR, right? Your risk to reward. So from there, we could just go back to the 15-minute chart and see what exactly happened in here, right? So lo and behold, this is what beautiful setup right here. So price comes in and taps our zone with this little wick right here. Look at what price does, right? So price previously was in a bearish trend, right? As you can see, so you can just mark these, right? High, higher low, high, higher low, high, right? And from there, look at what price does, right? So price comes down and then takes out this previous higher low to form a new lower low, right? So since the lower low has now been formed, this lower low right here, right? We understand that this price has now overall shifted bearish, which is exactly what we wanted to see from this area here. So if we now have a confirmation that price has now shifted bearish, right? So all you need to do, so let me just go to a blank space, right? Assuming that, so this is your trend, right? You have a trend like this with a break of structure and a retest, right? So you have a trend like this with this break of structure right here. Let's name that BOS, and then from that break you now have a potential area of supply here in which price has now come back to and retested, right? So from there you simply want to go back to an intraday time frame, right? So we went from the daily time frame to the 15-minute time frame, right? So within the 15-minute time frame, right, let's just assume that this box here is when price touches our point of interest, our POI, right? So let's just mark this as our POI, right? So when price touches our POI, we now go to this little box in here, which is the 15-minute chart, right? And from this 15-minute chart, so let's name this 15-minute, right? So from this 15-minute box here, right, what do we want to see? In this 15-minute box, all we want to see is something like this, right? So let's draw this out. Particularly if we're on a daily, we'll see it as a little box like this, right? If we're on a 15-minute chart, it will become a lot bigger, right? It'll become a bigger box, right? So within the 15-minute time frame, we want to see price going bullish and then ending that bullish pressure with a what? With a break lower, right? So instead of pricing, right, so price formed a low, a high, higher low, high, higher low, high, right? And from there, price fails now to create a high, and then comes down to create a what? A lower low, right? And from that lower low, all we need to see is particularly a retest within this previous high, right? Of course, in an area of supply, and there we can now just take our entry and target the overall lows. So this schematic in here, this is all we want to see, right? We want to see particularly this break of structure right here. So we can just push this a little bit down to make it much more clearer. Put in my template and boom, right there. So this is all we want to see, right? So now let's just remove all of these. So now let's just remove all of that, since I know you've probably got some concept there of what I'm talking about. So this is what we see, right? So when you come into the 15-minute time frame, we see this break of structure to the downside, and right away all we need to do is just spot that last buy before the sell, right? Which is ultimately this this little guy here, right? The last buy to sell, right? So this is where our entries is going to be based, right? So you could just place a limit order or whatever, right? So there's our entry if you did place a limit order or take a manual trade, whatever. So there's your entry, right? There's your entry. Your stop loss is now just above the high, because if price wants to go bearish, then there's no reason for price to come above this high here. And of course, the fun part is that our take profit target remains the same, right? So the only thing that changes is our stop loss. That's why I say that this could massively increase your RR. Boom. So we're now having a 20 pip stop loss with a 400 pip take profit target to make it a 1 to 20 RR swing trade, right? This is a beautiful, beautiful strategy, beautiful RR, and a beautiful trade too, right? Instead of, someone who would just put their order there and they have this massive stop above that zone and they're looking to target, the same take profit target as we are, right, of 400 pips, right? So this is just there, 400 pips, right? And then this stop loss is roughly 136 pips, right? So from a 136 pip take stop loss to a 20 pip stop loss. So that's the beauty and the advantage of this kind of refinement that I just taught you guys. And from there we can now just increase speed and play price out. So price moves, I don't know, maybe you could go to a high time frame like the 2 hour. Let's see this play a little bit more faster. And there's our trade, guys. So a beautiful sniper entry too, and our trade goes like that, and our take profit target is now hit, right? So this right there, as you can see, 400 pips, roughly 400 pips, right? It's absolutely beautiful, guys. I hope this video was very informative to you, and if it was, don't forget to like, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week or weekend, and until the next one, guys, love you, bye bye.